Have you ever left a meeting with your accountant and feel like you just got your heart ripped out when they told you what your total taxes owed was? Now, as much as I love surprises, those are not the surprises that I want to get. If you feel the same, then it's probably worth it to you to put some planning in place ahead of time to try and estimate out what your tax bill is going to be. But how do you do that without spending hours of your time? Now, in this video, we're not getting into all the nitty-gritty. Instead, I want to give you a quick and dirty calculation that you can do on your own using just 3 numbers from your prior year tax return. And I'm going to show you how to use those numbers to help you figure out how much you should be setting aside this year. Plus, if you stay until the end of this video, I'm going to share with you my personal system that I use to help make sure that I'm never unprepared come tax time. And if you want more tax help, I also have a bundle that you can grab by Getting Ready for Taxes bundle. It is linked down below. That'll help you get ready for taxes fast. So let's get started. Like I said, this is going to be the quick shortcut way to try and estimate out your taxes. However, if you love this stuff and want to get into all the nitty-gritty details about estimating your taxes, definitely check out my friend Hannah's video. It was a fabulous one where she walks through the full way to calculate your self-employment taxes, and it's a lot more fulsome than what we're going to do here today. But today we're going to do it the quick way. So first and foremost, start by grabbing your tax return from last year. I'll wait. Now, the 3 different numbers that we need to look at are on the first 2 pages, and they are your total income line, your taxable income line, and your total tax line. Now, on the most recent tax return that I have, those were lines 9, 15, and 24, but things can sometimes change from year to year, so just look for the names and not necessarily the line numbers. So the first thing that I want you to do is take your total tax line. That's the total amount of taxes that you paid. That includes income taxes to the federal government, and that includes payroll taxes to the federal government. And just for the sake of clarity, payroll taxes and self-employment taxes are essentially the same thing. It's Medicare and Social Security taxes. So all of that gets grouped together when you file your 1040. Now, take that total tax line and divide that by your total income line. Okay, so again, on this most recent return, that would be line 24 divided by line 9. And you're gonna come up with a percentage. You might be surprised at how low that percentage is. For example, your calculation may come out to being just 5, 10, or 15%, which might seem a lot less than what you thought you were actually paying as an effective tax rate. Now, remember, the reason that is lower than what you might have thought is because there's a lot of deductions. A lot of the income, especially the first income you make, is either completely exempt from taxes due to the standard deduction, or is taxed at much lower rates than as your income gets higher. So that's why you might be seeing a number that, when you average it all out, looks a lot lower than what you thought. So just to give an example, let's say you made $125,000 in total income and your total tax was $15,000. That means that your total effective tax rate was 12% on the money that you made. So that first $125,000 that you made, you had a 12% effective tax rate. Now, assuming that there wasn't anything crazy in those numbers that you don't expect to repeat, like a credit that you got that you don't think you're going to get again, ultimately, you can probably use that 12% for this year up to that first $125,000 you made in this example. So if you expect to make about the same amount of money or even a little less than you did last year, using last year's effective tax rate to figure out how much taxes you're going to have to pay is probably a decent way to do it. Now, you might be wondering, well, what happens if I expect to make more, which hopefully you do? And that's where things get a little trickier. And that's where that total taxable income line we talked about is going to come in, which again, based on most recent tax returns, is line 15. Now, you'll notice that typically that total taxable income is quite a bit lower than what your total income was. And that's because of things like the standard deduction. Maybe if you're a business, you might have the qualified business income deduction. There are various things that are being adjusted out as non-taxable. So that's going to take the amount you're actually taxed on down quite a bit. So you're going to take that taxable income line, and then you're going to go look at the IRS tax brackets for the year you're trying to figure out taxes for. So I've brought up currently the 2024 tax brackets. This is what they look like. So depending on what that number is on that taxable income line, you're going to look for where that falls. What tax bracket does that fall into? And the reason that you're doing that is because you're trying to figure out, if I make money that exceeds that amount that I've already made, what tax bracket am I in? So let's say in this scenario that I'm talking about, we had 125,000, like I said, in total income, but maybe once we took all the deductions that we had, we only have about 90,000 in taxable income. So I'm going to look on the schedule and realize that at $90,000, just above that, I'm going to fall in the 22% range. So I can expect the next about $100,000 that I make up until $190,000 in taxable income, right? That I am going to tax that at 22%. Now, unfortunately, if I just use that 22%, it's probably going to be too low. And the reason is because that's only income taxes, and that doesn't include our payroll / self-employment / Social Security and Medicare taxes, whatever you want to call it, it's the same thing. So to the extent your income is earned income, you're going to have to add those taxes on top as well. If you're self-employed, let's say you have a sole proprietorship or an LLC that's making money, you're going to add a full 15.3% on top of that, at least until you max out on your Social Security. So for 2024, the max amount that they take Social Security out of is $168,600. Now, the amount at which Social Security maxes out goes up every single year, so we can expect that to continue to go up. But for this year, it's about $168,000. So in the example that we've talked about, if this person had $90,000 in taxable income, line 15 income, then they can expect to pay Social Security taxes up until the next $168,000. So that's another $78,000 from where they are now. So let's say you expect to make just $20,000 more than you did last year. Last year, your total taxable income was $90,000. This year, you expect it to be $110,000, which is still underneath that Social Security max out. That means you're going to take that 22% income tax bracket that amount will fall into, plus an additional 15.3% that essentially is your Social Security and Medicare. So to estimate taxes on that extra $20,000, you're going to use about 37-ish%, and that's how you're going to come up with the additional amount above and beyond what you paid last year that you're probably going to owe this year. Now, obviously, if you're already over your Social Security max, once you hit that, you no longer have to add that additional Social Security, and that's 12.4% of the total 15.3. So you still have the Medicare portion that does not max out. However, it gets a lot lower once you max out of that Social Security taxable income. So obviously this methodology is most useful when the current year is not all that different from the year before. Yes, you may have some fluctuations in income that have gone down some or up some, but it's not a huge, massive change that's going to swing your taxes in a large direction. So this is the methodology that I actually use throughout the year to be able to estimate how much my tax bill is going to be. However, if you want to get a little more specific, I totally get it. Definitely check out my friend Hannah's video that I mentioned, or talk to your own CPA and get a full analysis done of your situation. Getting a CPA to run the numbers is always going to be the most accurate. Just make sure they're using this year's numbers and they're not relying on just last year's numbers. Now, another important thing to mention here is the fact that as long as you pay in total taxes equivalent to last year's, even if your tax bill is significantly more this year, you won't run into fines and penalties. And that's because the IRS has a safe harbor that says that you can use last year as a baseline for determining this year's taxes when you're paying your quarterly estimated taxes. For higher income earners, like married filing jointly that are making over $150,000, you actually have to pay in at least 110% of last year's in order to get that safe harbor. Now, the obvious problem with just using last year's numbers is that if you have significant income increases this year, you may get a big tax bill that you're not prepared for. And that's why this calculation showed you how to figure out how much additional tax you could owe on that earnings growth. Now, I mentioned at the front that I was going to tell you what I do to prepare for taxes. And typically, what I actually do is profit planning in my business. And for taxes, that means setting aside a particular percentage of my profits for taxes based on this calculation. Now, what I typically aim to do is pay in what my last year's taxes were, and then save additional money in my own account because I want to keep it. I don't want to give the government an interest-free loan, but I have it set aside from all of my other business money so that I don't spend it, but it's there come tax time so that I can pay that expected increase in the bill. So if you want to learn more about profit planning and how to manage your money and separate it into various different buckets that will serve you, then definitely go grab my profit plan at the link down below and get started. Now, if you're watching this and realizing, heck, I need to get my numbers in order, I don't even know what my profit is in my business, then I want you to go check out this video where I walk through a very simple way to create a profit and loss using Google Sheets. Thanks so much for watching. If you found this helpful, definitely make sure to subscribe for my future videos. I'm always putting out new content to help you manage your finances and make things easier. I'll see you next time.